Europe is in a fight, not just in terms of security and defense, but for competitiveness, for technology development and innovation, for energy independence, and of course, over trade. And the next portion of our program starts to dive into economic challenges and opportunities, European competitiveness, and of course, Europe's AI future. And we're going to begin with a fireside chat. I am very honored to welcome to the stage Paolo Gentiloni, former Prime Minister of Italy and European Commissioner for Economy, and his conversation will be moderated by Rahman, my colleague, Managing Director for Europe from Eurasia Group. Come on up.
Prime Minister Gentiloni, it's been a year since Mario Draghi articulated his reform recommendations for the European Union to remain competitive. At Eurasia Group, we assess progress against this agenda, and I think it's not unfair to say advancements have been incredibly lackluster. Why should this audience have any confidence in Europe's economic future?
Mario Draghi report is a perfect subject for after lunch. So I think the official answer from Brussels would be, we delivered last January something that the Commission called a competitiveness compass. And indeed, we should not underestimate the compass decided by the European Commission. You may remember the Green Deal package, the previous Commission. It was a package and it was very, very significant. In this case, my impression is that progress are indeed quite slow. I'm optimistic. I want to tell you I'm optimistic on the EU future. I think there is a chance of strengthening of Europe in the coming period. But on competitiveness, if we take the four main subjects of the Mario Draghi report, maybe some progress on the relation between decarbonization and industrial policies. Yes, some progress on economic security to be checked against the trade deal, but there are some progress. Little progress on the other two big issues that were first the innovation and tech gap, and second, bureaucracy, regulation, simplification. To prove that this is not unfair as an assessment, you may have noticed that President von der Leyen announced in her speech a timetable on this. So we had a package in January, and we announced a timetable on September. And this means that things are not moving sufficiently fast. Why? First, where is the money? Second, where is the political determination which is needed to progress on, especially on the two things we are lagging behind? Where is the money and where is the political determination? So I'm not finger pointing the Commission, or at least not only the Commission, because where is the money and where is the political determination involve European countries, not only the Commission.
I will ask you about money in a second, but on another big area that the Draghi report explores, capital markets union. When you were in the European Commission, this was a brief that I think you also cared about and worked on. What progress do you see on the capital markets union agenda? Because that's also really important when you think about the international role of the euro as well.
It's very important for the international role of the euro, for the scale of our capital markets, and so the possibility to scale up companies, innovation, investments. It's crucial to avoid the fact that our European savings are flowing in other markets, and in the US, first of all. So it's really crucial. In my experience as European Commissioner, I have to admit I heard a lot of words on the Capital Markets Union, at the point that then Enrico Letta proposed to change the name. Now I think they call it the Saving and Investment Union,
Right.
no more the Capital Markets Union, but very, very limited availability to move. I personally saw clashes between not only Luxembourg, which is against, or Malta, but clashes between the French and the German finance ministers on this subject that I haven't seen on other subjects in the EU meetings. So, but something is moving also in this so difficult subject, and it is the awareness. What is crucial in my view, and what will probably give also to the Draghi report a boost in the coming months, is the fact that there is an awareness of the link between economic competitiveness and geostrategic role of Europe. So the pressure that probably was not sufficiently there to overcome national interest, only addressing the economic and competitiveness issues, now, in my view, is there for the simple fact that in a weaponized world economy, if you are not sufficiently competitive, you are losing also from a geopolitical and strategic perspective. So we had a big, big progress in awareness. So I'm no more in the Commission. I'm not able to tell you, well, I'm able to tell you that things are moving also on the Capital Markets Union after 4 or 5 years where we were blocked on the banking union, but even the banking union could restart.
Do you think it's possible that we could see first movers, so using enhanced cooperation as the vehicle to integrate a smaller group of countries in their respective capital markets? Is that the likely way this moves forward, or do you think we need consensus at 27?
No, I think, and I know that there are countries moving on enhanced cooperation, especially on financial common tools, savings common tools. This is mostly an initiative coming from the Spanish government, calling for, but I think they already gathered 12, 14 countries in working for this, and definitely this is the way if you want to overcome the resistance of some small countries that are totally against this. But the premise is, are we now in a position where the big economies, the big countries are on board? More or less they are, much more than 2 or 3 years ago. The German position changed, and it is now more open to a possibility to make progress on this. And I repeat, even on the banking union. You may remember that the banking union collapsed in 2020, 21, on the divergence between Italy and Germany.
Right.
Germany wanted to wait the national Italian treasuries in the Italian banks, and the Italian wanted a backstop and then they didn't sign the stability mechanism backstop. But again, the situation of the treasuries changed, the intra-European spreads are enormously reduced. So I see some perspective also in the banking union. But most on the capital markets union, my view is that the geostrategic awareness is moving a stalemate that was there in the last years.
And you think the von der Leyen Commission and Valdis Dombrovskis can help push this through to forge consensus among the Council?
I think there is a Portuguese commissioner who is in charge of this capital markets union. It was an Irish commissioner in charge of it in the previous commission. The European Commission is very silos divided, but I definitely, yes. The environment has changed. So after years of blah blah on the capital markets union, I think we will see some progress in the coming 1 or 2 years.
So the environment changing may also be conducive for another debate in Europe that is very politically contentious, and that is the fiscal question. Mario Draghi talked about an 800 billion fiscal and investment gap per year to finance the kind of investments that are necessary to close the competitiveness gap with America and China. What's your sense on common borrowing? Merz has obviously made a big move in Germany. Do you think he's going to enable more financing at the European level? How do you see that playing out?
Well, I think and I hope, of course, the basis is what kind of overall fiscal situation we are in Europe. And are we, what is the situation of the debt of public finances? Of course, the situation is not optimal, not perfect, but it is also, from my point of view, quite reassuring. So what is the European perspective, the European outlook? Still very moderate growth. You know that the last forecasts are referring to 1.2% growth this year, with Germany still at 0 or negative growth. So this 1.2% means something much better than 1.2% in perspective. Good data on employment, on inflation, and external trade exports declining, 0.5% decline in the second quarter. In this picture, do we have an enormous and dangerous level of debt? In my view, no. We have a 90% debt on average. And you may remember a few years ago this terrible acronym of PIGS, the countries with high level of debt, blah, blah, blah. Now, most of these countries are doing quite well. Their debt is declining, right, or, as in Italy, under control, and in other countries, Spain, Portugal, Greece, definitely declining. Of course, we have a France exception, but overall, in this environment, I think that giving a new chance to common borrowing and making progress towards having permanent safe assets denominated in euro, we have now more or less 950 billion denominated in euro issued by European institutions, meaning EMS, EIB, and Next Generation EU. But the market is asking if this is destined to decline, or will we have new issuance, common issuance. My view is that we need common issuance for several things. I agree with Mario's projection of this 700 billion of investment per year. Of course, these are private investment mostly, but part of this should be public, and we need common financing for common goods. Is this completely unrealistic? I don't think so. Also, in the project of the multi-annual budget of the European Commission, there is at least a foot on the door on common borrowing, limited, but it is there. My view, Mij, is that we have a driver of the necessity of new common borrowing, and this driver is common defense. So you may ask me, but the Germans are against.
Right.
My answer is, first, several countries that normally are against common borrowing in the northeast of Europe are less against if we refer to common defense. And second, my view is that if there is a political dynamic, a political pressure, I don't see how the German government can say, okay, we spend our trillion, our half trillion for our defense on the coming 10 years, and we don't care of what happens in the other countries. This would be very surprising and not in line with the normal attitude of Germany towards Europe. So the negotiation didn't start until now. Only the French president, which is not at his best in terms of political power, addressed the issue. My view is that if France and Italy, for example, would join their forces in discussing this with Germany, we could have a chance. Without this, the perspective of a stronger common defense will take a lot of time, and we will continue to have dispersion among the different countries, which is, we will continue in what we did in the past. No? The Czechoslovakia is no more there, and we have two different tanks, a Czech tank and a Slovakia tank, and they are not compatible among them. This is the history of military procurement in Europe. Can we change this? Yes.
But on the financing, is it fair to argue that absent a much more substantial deterioration of the geopolitical environment, the kind of sentiment that was pervasive in February of this year, when J.D. Vance turned up at Munich and went to meet with the AfD, a sense of absolute despair in Europe at the nature of the US administration and its behavior towards allies, absent that context, the political push within Germany and Europe for common financing of the kind we're talking is highly unlikely. Because what you describe doesn't suggest there is pressure to move this debate forward quickly. It sounds much slower burn, maybe in the context of the EU budget, but nothing imminent.
My view is that pressure is there. I'm not sure that the situation of the transatlantic relation now is better stabilized. I heard some of our colleagues this morning referring to this. I don't know. I'm not sure of this, honestly. I understand the point that many are making that President Trump on different subjects is an accelerator of trends that were already there. But this is not the case, in my view, in the relation with Europe, with the EU. In this case, we have a real big change. And I think this big change is perceived by many governments, of course with the caution which is needed because we are addressing the Ukrainian crisis. But in my view, the pressure is there, and I'm not sure that the relations between Europe and the US are now stabilized in the new Turnberry framework. What is the Turnberry framework? It's something that a tweet could change tomorrow.
Right. So I will ask you about trade in a second. Could the potential use of Russia's frozen assets in Euroclear, unilateral asset seizure, not leveraging profits, could that be one way Europe seeks to fill the fiscal and investment gap it's confronting, perhaps in the area of defense?
I think if we use better, if we strengthen our use of these assets, this should be addressed to support of Ukraine, not to other projects, other financing needs. Then if you ask me my view on the seizing of these frozen assets, I have to admit that my view gradually shifted in the last 1 year, 2 years, from a fundamental caution that I had, maybe because I was in office, because of the potential consequences, to a more favorable position to increase the use of these assets. Why? Well, because enough is enough from a certain point of view, and I'm not referring to the seizure of these assets in itself, which I still consider risky for the euro and the central bank, the European Central Bank reputation. I'm referring to a more active, aggressive use of these of the proceeds of these assets.
Prime Minister, what are those? Can you just elucidate those risks? Because I do believe the British government and others are now of the view that it would be legally possible to unilaterally seize. It may be fine for the UK government to argue that because they have few assets locked up in Euroclear, but can you elucidate what those risks are?
Well, the discussion that we had for a couple of years was always interesting because those that were supporting the fact that there are no legal problems were countries with no assets or countries like our Japanese friends that were saying, okay, but our assets, I think they have more or less 18 billion, we will not seize them, but we should seize the 200 billion that are in Belgium in Euroclear, so in Europe. Of course, there is a risk, which is the fact that other countries, sovereign actors, having their reserves in euro, could guess, well, if they are seizing the Russian assets because the Russians are bad, if we become bad in 10 years, 20 years, they could seize our assets. So I understand this kind of concern. I discuss frequently with those countries when in office, but I think it's clear that we can, without seizing in absolute terms the asset, made a more aggressive use of the proceeds and so having a larger amount of money to support Ukraine. I think that this is possible, and this could be at the end a compromise in the EU, where the ECB is, of course, more reluctant than some Nordic or Baltic countries on the subject. The compromise could be we will use the proceeds in a much more profitable and aggressive way, but it's not to me to decide, of course.
Turning to trade policy, so Europe gets a 15% baseline tariff. It's the one area, perhaps, where the EU has leverage because of the single market, because of how trade competence is organized in the EU. Many people, I think, wore off the view the Commission should have been stronger. And if they had been stronger and had fought the administration, the likely equilibrium would have been a better one. What's your sense of the strategy and where we've ended up? And then I have a question for you on the forward-looking trade agenda.
Well, I agree with those saying that the EU could have been stronger in this negotiation. I understand the point made by those that say that the parallel negotiation, the parallel discussion on Ukraine made very difficult to be stronger on trade. I understand. Let's see. Because the argument, I saw that President von der Leyen used this argument yesterday in her speech, that, okay, it's not the best agreement that you can dream of, but it provided us predictability and stability. Did it? I don't know. Honestly, I don't know. I think Ian this morning referred to the unreliable.
Right.
I think we don't have predictability, we don't have stability. Not at all. In recent days, I think the Europeans had an enormous pressure from the US administration asking to raise tariffs against India to 100%.
Right.
And then yesterday you saw probably a tweet of President Trump saying that Modi is one of his best friends and that they are near to an agreement. And this shows that, as Modi did Canada and Mexico, to have not an aggressive attitude towards our American friends, which would be crazy, but to have a negotiating position, showing also our strength. We are a trade superpower, could have been possible. Easy to say from outside, so
right.
I respect the decision that were taken. But I think it's not true that we had an agreement acceptable, giving us predictability and stability. I hope, but I'm not sure.
And the unreliability or unpredictability, do you think that will now galvanize the European Union's trade agenda, so Mercosur or India? And even if it does, are any of these deals of any economic consequence, or are they not? Because if you look at the Commission's own impact assessment for Mercosur, the long-term contribution to EU GDP is completely marginal.
Well, I think we should always start from the fact that there is a clear link between these negotiations on trade and a geopolitical, geostrategic dimension. So it's not only how much the fact that we have 15% of basic tariffs with the US is having an influence in our economy, because this influence could be worse for the American economy than for the European economy. But the problem is how in this game of power that is a weaponized world economy, you are playing. And in this perspective, the EU could be the only alternative to China in being the center of a world trade rule-based system. This is what is at stake.
Right.
President Xi is proposing China as the new center of the system. And I don't think that this is possible. I think that for Europe it is possible. And the Mercosur, which was an almost dead
deal,
is now reborn.
Right.
And this is part of the consequences of what we lived.
Prime Minister, my last question for you, and then we're at time. Wolfgang Schmidt earlier this morning, when discussing the China question, certainly in relation to Germany, sounded very tentative on the idea of de-risking. Yet there are very significant concerns about Chinese overcapacity, Chinese dumping, Chinese lethal aid to Ukraine. Do you see a more common and coherent approach, a tougher approach the Union is now taking towards China?
Well, we live in very strange times. I spent several years as European Commissioner discussing with our American friends on the perspective that they were supportive of, and that was called the decoupling, but decoupling with friendshoring.
Right.
So meaning we should give a privilege to trade relation between like-minded countries. In the Rose Garden, when President Trump, in the Liberation Day, this perspective of friendshoring, which was already almost dead, is completely dead. So for Europe, I don't think there is the possibility of a reset of our trade relation with China. It's very difficult to underestimate the risk that we have in this relation. And the Chinese are very reluctant in recognizing their overproduction, the problems that we have with their goods in Europe. So inevitably, I think we should be autonomous in our relation with China. We can't do with China our politics based on what the US administration asks, but being autonomous doesn't mean being open, because this is impossible. It would be very negative for our economy. So we should be autonomously competitive towards China.
Prime Minister, thank you for joining us and engaging so openly in what I hope was a thorough discussion that will now set up the next panel on competitiveness. Thank you very much.
Thank you.